Hello, my name is Nick Nelson, and the purpose of this video is to share with you 3 objectives to help you navigate commercial real estate investments during the pandemic. We're going to be talking about creating a market environment to improve financial decisions, and I want to share with you what I've learned. What you see is not always what you get when calculating trade areas. So I developed a method to improve how the data is created so that you can make more informed investment decisions. Since we can't look back to look forward, our best chance is to look at each other to build the intelligence needed to navigate the transactions. We can mitigate risk by running what-if scenarios and see the financial impact of potential outcomes like, what if your anchor tenant goes default in January? What if your next tenant decides not to renew their lease? Or what happens if your next space takes longer than expected to lease out? So true, right? Okay, pop quiz. Retail for 500. In which primary market in Texas is expected to experience 3,026,560 feet of negative retail absorption in 2021? You got it right. The answer is contact me and I'll give you the answer. If a good deal was in front of you right now, how would you know? What's your strategy to maximize equity yield? Do you have a written plan? Now, I listened to Benjamin Franklin because who else do you know is smart enough to get their face on a $100 bill, right? Here's my quote. All right, so let's dive into this market analysis. In concept, your market environment should highlight the features, the areas that you want to be close to. So this is population. So as you can see, if you wanted to be in an area that is more densely populated, this is San Antonio, you would probably look at this area, which I can tell you is close to downtown. Here's Houston, here's Dallas. But the interesting thing about this map is the height of each of these hexagons is equal to the number of people inside of it. So it's actually to scale. And looking at the difference between Austin and San Antonio, it's actually pretty interesting because we've almost grown together as one market. So I thought that was kind of interesting. I wanted to share that with you. So that's the conceptual level. Let me tell you more about on a technical level. This is a trade area, and when I flip it on its side here, you can see that I've split this trade area into a lot of different segments. So, you go and you pick a point, you drop your trade area, you run your report, and you get an analysis, right? You get your numbers. So nothing different there, right? Well, maybe not. But let me tell you this. The smallest aggregate level of data that you can get is usually coming on a census block group level. And so you can see these jagged edges here. These are the census block groups. This is your trade area. When I said sometimes you're not getting what you're seeing, this is the case in this example. So we ran this trade area and we think we're getting the information inside this circle, but what we're actually doing is, since the data is being provided in these census block groups, the circle is just identifying which census block groups touch it so that you can bring that data into the circle. The problem is you think you're getting this, but what you're really getting is this. So if the data that's being provided to you is not within the boundaries of the trade area that you've identified as where you want the data to be located, then how are you going to make the best decisions? Because what if 1,000 people live over here on this part of the census block group, but you've ran your trade area right here? You're not going to see, or you might incorrectly get that information in your circle, but it's technically not there. And if you look how big these blocks are compared to the circle, if we're including data from outside of the circle and that area is larger than the area of the circle itself, then this kind of produces results that aren't very usable, to be quite honest. So I did something different. So what I did is I looked at this spatial match and I said, okay, let's, for conversation purposes, let's pretend 100 people live in the census block group. Well, by projecting where actually people live inside of the group, so let's say that we've learned that 10 people live inside of this slice right here. So if 100 people live here and 10 people live here in this slice, then this would be 10% of the data that's returned for this entire block, right? So if this represented 100 wacky inflatable tube men that were sold within 1 year within this geography, then the results would show in my model that actually there's only 10 wacky inflatable tube men that were sold within this piece. And so you add all of those apportioned results together, and the result is actually seeing the data that's inside of the area that you wanted. So this is kind of a breakthrough. I don't know who else is doing it like this, but clearly, if you don't look at a method to apportion the data inside of this circle, you're just not getting accurate results. So once you do that, you can do something like this. What we're looking at now is a tenant, one user, and all their locations. So as a commercial real estate investor or owner, how do you know your site is within the top 10% or bottom 10% of all the sites? See, we can see this particular variable has been encoded in white and blue to help give us the signals that we're looking for here. In this case, actually, the signals are based off of an algorithm I put together that every area that is clear white, not dark blue, the clear white areas, in every case, I've been able to zoom in and find new development. So what do we call new rooftops in retail? We call it demand, right? Because retail follows rooftops. Let me show you one more example. This is what income looks like across multiple markets. Have you ever wondered, hey, what does this look like, this area look like with these characteristics, maybe in a different market? So you can see some of the top income areas, you can see where they're located. So ultimately, this stuff is definitely very helpful when you're trying to plan out your investments. All right. So I'd like for you to ask yourself, is your investment where it needs to be? How do you know? Is it your best guess, or is this a written plan of action with your next high impact steps identified? Now, if you need a plan, I don't have a magic bullet, but I have developed the skills and the experience to help you navigate transactions during the pandemic. Next time we talk, just ask me how I recently transacted at 12.5% higher than the qualified off-market offer that my client received, which resulted in an additional $300,000 in my client's pocket. Thanks for listening. If you want to work together, let me know.